Hello everybody, welcome to this week's edition of Northwest Quadrant Wealth Management E-News. Thanks for joining us. We hope everybody had a great Thanksgiving. So as we head into the end of the year here, end of 2024, we look at the market and there's extreme levels of bullishness. There's lots of different companies that do surveys on how optimistic and bullish people are about the stock market, and we're getting to extreme levels in terms of the number of people that are really optimistic about the stock market. Now, Josh and I are always optimistic about the long-term prospects for the stock market, but when we get to this level of optimism in the short term, usually the next thing that happens is we get a correction. And so we just want to prepare everybody because the market has been straight up for so long, essentially 2 years, that you should expect some volatility to the downside. It's been a long time since we've had any, and so usually when we get, like I said, to this level of bullishness from especially retail investors, the next move, significant move when the market is down. It doesn't mean we're going to do anything. Investing is never a binary decision, but we are certainly due for some volatility to the downside. Now, the good news is when you look at the U.S. economy, it's doing well. Corporate earnings are still growing. All those things are good, but lots of bullishness and an expensive stock market. We're in the 98th percentile in terms of expensive. Means most likely we'll have some volatility. Probably not maybe in the end of the year, but probably in the first quarter. Time will tell, because certainly Josh and I certainly don't know what's going to happen in the short term, but we're certainly optimistic in the long term.
We're not here to complain about higher stock prices, but there's certainly a risk also that the sort of revival in animal spirits you've seen, particularly in the wake of the election earlier this month, of course, was that this sort of becomes self-fulfilling, and that revival of animal spirits further stokes inflation and suppresses the ability of the Fed to cut interest rates. And the data is already sort of bearing that out. Of course, we've seen higher than expected personal consumption expenditures inflation, which is what the Fed actually looks at. That came in significantly higher than target, and even more worrying as a part of that report was the extreme amount of wage growth, only worrying so far, and I mean to say that it will stoke further additional inflation. Retail sales also came in significantly higher than expected, and this analog to the 1970s is actually very, very much closer than we'd like to see for comfort. And I think that really ebullient sentiment that you're seeing also in the months to come is going to continue to play out in the data as we're starting to see what seems like a even further acceleration to the upside in economic activity. So of course, investors are going to be let down on the lower rates front, and that's in line with what we've sort of anticipated all along. But that's how it's playing out, and we'll of course see confirmation in the months to come.
All right, if you have a question about your situation or your account, you can call us at the office. The number here is 800-743-0988, or email either one of us, Josh or Tyler, at northwestquadrantwealth.com. We'll see you back here in a couple weeks.